At a time when wages are not keeping up with inflation, wages are not keeping up with the cost of living, at a time when jobs are being lost to the millions and soon to be tens of millions, hundreds of millions at the hands of AI, you would think that people would change their habits, would start to modify behavior, would start to maybe look one step down the road. And it does not appear to be the case. So I'll share a story with you today that came out Zero Hedge this morning. And I don't know, maybe today might come across as a bit of a rant. Again, I'd love to get your thoughts and comments. And look, maybe it's not something I should even care about, right? You might say, well, why, Matt, are you sharing this information? You're not in this category. And that's true, I'm not. And many of you that watch this show are not in this category of the, let's say, casualties I'm about to share with you. I don't know. I mean, it doesn't seem to me the people that are these statistics care. Some do, some it's obviously extenuating circumstances. They find themselves in a situation, right? But many, they don't care. They're just not responsible. They don't want to gain financial literacy. They don't want to do the right thing. So maybe none of us should care, about these people. But it bothers me. It bothers me because these are the people that we need, are going to need to see being productive people in society and out there contributing to GDP and to the economy. Many of you, I get comments. I got comments to yesterday's video, coming out and saying, well, I own, 17 homes and I'm good. I have no debt and I have money in the bank and I've got a stack of gold and silver and Bitcoin and whatever. Obviously, folks, this does not apply to you, okay? So the scenarios that we talk about sometimes on the show, if you are one that made smart decisions, maybe some of you got lucky, maybe some of you were just really smart with the way you handled your finances over the years, and right, kudos to you. But for millions in this country, it's not the case. And so that's the let's say intro to what I'll share with you now. But we're going to have a real discussion about the casualties in this country. And I mean casualties from foreclosure of their home, casualties from repossession of their vehicles, casualties from their bankruptcy filings, casualties from their defaulted student loan obligations, casualties from their sub 500 credit scores, casualties from the money judgments that are going to be entered against them because they didn't pay or were unable to pay their financial obligations. There's going to be a point of reckoning, and when I see what I'm seeing in today's data, it leads me to, it gives me some real concern. And I think even for those that are not in these categories of folks in this country, we should all be paying attention to this and maybe even doing our part to help educate those that are not in our situation, okay? Maybe some of those that are younger, maybe some of those that need some direction and do not fall in, and they're, let's say, susceptible to falling into the consumer debt trap in this country. So here's the story. Total household debt rose by $185 billion in the second quarter of 2025. That's a 1% rise from 2025 first quarter. Balances now stand at $18.39 trillion and have increased by $4.24 trillion since the end of 2029. Here are the balances. Mortgage balances grew by $131 billion during the second quarter of 2025 and totaled $12.94 trillion at the end of June. Balances on home equity lines of credit, HELOCs, rose by $9 billion, the 13th consecutive quarterly increase. There is now 411 billion in outstanding HELOC balances, 94 billion above the low reached in the first quarter of 2022. And this morning I saw an ad that came across my Google feed about HELOCs and some companies saying, no pre-qualification required. You can have a sub 600 credit score. We don't want to see your tax returns. We don't care about your income. Apply now. So they're trying to push these HELOCs out as well, right? So people keep getting further into debt. Credit card balances rose by $27 billion during the second quarter and now totals $1.21 trillion outstanding and are 5.87% above the level a year ago. Auto loan balances rose by $13 billion and now stand at $1.66 trillion. Other balances, which include retail cards and consumer finance loans, were roughly unchanged at $540 billion. Student loan balances edged up by $7 billion and now stand at $1.64 trillion. In total, non-housing balances increased by $45 billion, a 0.9% increase from quarter one 2025. Mortgage originations increased slightly, okay? But there was $188 billion in new auto loans and leases during the second quarter of 2025, an increase from the $166 billion observed in the first quarter of this year. Aggregate limits on credit cards continued to rise, with a $78 billion or 1.5% uptick in the second quarter. What that means, guys, is that people are applying for and taking out additional credit cards, and or they are asking for, applying for increases in their credit limits. Home equity lines of credit, HELOC limits rose by $18 billion, continuing the growth in HELOC limits that began in 2022, right? People using their homes, for many of their primary asset, as piggy banks. Credit scores of newly originated auto loans decreased as the median score for auto loan originations decreased by 6 points, right? So they're giving out more auto loans to people with less ability, or let's say history, of repaying their obligations. The U.S. consumer is drowning in ever more debt. But it's hardly a surprise, since it says life for middle-class Americans is now largely unaffordable. Most Americans have no choice but to take on even more debt. I don't agree with that. I don't want to say most Americans. I think that the ones that are out abusing, their lines of credit, abusing loans, taking on car payments they can't afford given their income, I don't know if you would be able to qualify most Americans as having no choice. There are exceptions, obviously, okay? We talk about that all the time. So as the New York Fed notes, aggregate delinquencies in all categories remained elevated in the second quarter of 2025, which is putting it mildly. As of the end of June, 4.4% of outstanding debt was in some stage of delinquency, which is 0.1% higher than the first quarter. And while transition into early delinquency held steady for nearly all debt types, student loan delinquencies have been on the rise since the beginning of the year, after the government ended the freeze on repayments, right? Transition rates into serious delinquency is defined as 90 or more days past due. And folks, I can just say, when people get 90 days back on an obligation, whatever it is, that obligation's so unlikely to be caught up, okay? What's going to change in their situation to give them a windfall where they can all of a sudden catch up? Because if they're 90 days late on one thing, they're late on the other, or they're robbing Peter to pay Paul, and it's just a downward spiral. It says the student loan delinquencies exploded higher for those type of loans, as the share of student loan debt entering serious delinquency was 12.9%, the highest in 21 years of data. It says There has never been such a catastrophic deterioration in student loan in U.S. history across borrowers of virtually all ages. But listen to this, especially for those 50 years and over. So we have a segment of the population that are over 50 that have student loans and they're defaulting on their obligations. It says while transitions into delinquency is part of the bankruptcy pipeline, the end is also getting busier, and about 131,000 consumers had a bankruptcy notation added to their credit reports in Q2, an increase from the previous quarter. It says expect this to explode once all those student loan delinquency transition to defaults in a few months, at which point the student loan crisis becomes front and center. And I will say this, again, I'm not giving legal advice here, but federal student loans, it's my understanding that those cannot be put into bankruptcy. They follow these young people around literally forever. So we had Jerome Powell out last week when it was said about the delinquency rates in the country. He says essentially you have a consumer that's in good shape and is spending. That's a quote I understand from Powell. A consumer is in good shape and is spending. So evidently the Fed equates spending with being in good shape, right? So I'll let you guys leave your thoughts on that. Obviously, from the increase in debt levels across all categories, they're not spending money they have, they're borrowing money and going into debt. It says this quarter's flow of household debt into serious delinquency was mixed across all debt types, with credit card and auto loans holding steady, student loans continuing to rise, and mortgages edging up slightly. Joel Scally, economic policy advisor at the New York Fed, said in a press release underplaying the clearly catastrophic surge in student loan delinquencies and soon defaults will result in tens of millions of consumers suddenly finding themselves carved out from the U.S. consumer economy, just as the student loan crisis goes front and center. And obviously that's what I'm talking about relative to these people now not being able to become productive members of society, not be able to get ahead. Okay, and again, these are not the people out that are buying gold. They don't have 2 pennies to rub together. They're not the ones out buying Bitcoin and cryptocurrencies and doing staking and all these things, right? They're not the ones out employing people and starting new businesses. They're not the ones investing in the stock market, okay? Like a lot of you are, I understand that. This is a different category, tens of millions, hundreds of millions of people in this country that are simply not, they're out of the game, right? They're done. It is end game for many of them. So what's the solution? Well, I mean, it's going to have to come to a head, and then we'll have to see how it all plays out. Seems to me that people need to wake up and understand what's going on. Maybe all of you guys watching can share the video, do your part to try to impart some financial knowledge, some financial education to people so they understand where it's going if they fall into one of these categories, okay? Because recovery is unlikely. So what do? You heard the word triage, right? Triage. So maybe it's going to be time once we assess all the casualties to triage and determine, which ones, are in such bad shape that they can't be saved, which ones, have at least done their best and try to minimize debt and be responsible with their spending, that deserve to or can be saved, to hopefully be rehabilitated and being, a contributing person in society for GDP in this country, right? So again, that's today's data. I hate to I wasn't going to share it. I know I'm going to get some of the comments saying, it's all doom and gloom and it's just negative. If you watch the stock market today, you made money, right? People in the stock market, it's up. So people are excited to hear about Apple and what's going on with that. They're excited that cryptos are starting to rally again. They're excited about all their rental properties or rental homes. Again, we're talking about 2 totally different segments of society right now. But I will tell you that the former I just discussed with you, okay, that segment is growing and getting ever larger, okay? And that is not good for anybody, okay? I'll leave it there today. Thanks for letting me rant a bit. Please, if you enjoyed the content, if you wouldn't mind hitting a like for me, that'd be great. And please subscribe to the channel. Share these videos, please. And as always, I invite and welcome your comments and thoughts. With that being said, I will talk to all of you soon. Bye.